Today, we'll explore the recent developments surrounding AMC Entertainment and the secretive world of high-frequency trading. Join us as we delve into the perplexing changes in AMC's stock outlook and unravel the suspicions surrounding Wall Street's manipulative practices. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. First of all, remember last month Citi issued a downside catalyst for AMC common stock due to the potential conversion and reverse stock split. Well, guess what? Citi just closed this potential downside, according to Bloomberg. And the fun part over here is that while the first time they issued the downside, they didn't say that the ape will go higher, right? And now they're closing the downside of the AMC common. You will presume that they expect the conversion not to happen, judge to not approve any revision of the settlement, and essentially AMC to go on the previous trajectory without any downside dilution or whatever. What is on the media? Probably this is the reason why AMC is up around 8% so far. But that's not the whole story, as you may have guessed. To get the actual confusion for potential price action of AMC and Ape Citi issue, again separating this report, came late yesterday, right before Monday morning. In report released yesterday, a person from Citi maintained the sale rating of AMC Entertainment with a price target of $1, $0.65 for clear reference over here. The moment when they issued a 30-day negative downside catalyst last month for the stock, they also issue a sell rating. So they changed the negative catalyst, but they didn't change the sale rating, as you just see. So the deal over here is that they're still negative and bearish on AMC, but they simply don't know where the stock is going. This is the reason for it. Because if you expected the stack to go down in the next 30 days, probably you will short it, you will buy puts, you will bet on the downside. But now they don't want to bet on the downside. They just issue a sale rating for people who want to bet on the downside. So in my opinion, guys, no one knows anything. They don't know nothing about what potential decision of Chancellor Zern will be coming. They don't know nothing about the potential dilution or price target if approved, and what could happen with the ape if not approved. It only seems to me, in my opinion, that they simply don't like the company. They don't care about the securities at all. And speaking about the company, seems to me that Maron was listening over the weekend, all the videos, all the messages, all the tweets that the company is doing amazing box office. And he gave an argument, no matter how good is the box office, there are still issues on the table according to him. If you're rooting for a full pandemic recovery for the company like him, right? You got to be happy that AMC had the best week of its history due to the revenues. But Alameda highlights that this is not enough, and this is not nowhere near where the company standed in 2019. According to him, still none of these changes that the year-to-date box office remains lower than what it was in 2019, or that there is uncertainty due to our having to cope with potential issues with the writers and actors. And he said that the risks I cited in my open letter a week ago are. He's not joking, guys. Just follow the line. Citi removes the downside catalyst. We're having a lot of other companies who are expecting not to see the conversion. We're seeing a lot of individual investors who are getting mad not only to the conversion, but to Maron. But I do understand that Maron is a very good businessman, so he's a CEO for so many years, he knows how to deal with this stuff, right? That's the duty, the responsibility, and the leadership that the CEO is usually expected to have. So as you saw, the best week of AMC's history, what has to be done from the shareholders and public has been done. People are here, people watch, people pay tickets, people buy food and drink in the theaters. So 30-day catalyst probably expires. I don't know. I don't keep up the exact dates of the issuance of the sell rating versus today's date, but if they are still in the same position and expectations, they could simply extend it. They could come up with a title. Citi extends the downside catalyst for AMC, but they did not. So this means that they feel that they were wrong and they don't want to be wrong publicly, right? Well, Wall Street doesn't want you to see this and to know this either. This is Katsuyama. This is the founder of IEX, the only lit market exchange that his investors doesn't actually trade on its exchange, which makes a big difference on the market. And he explained very simply, sometimes we just look in a stock with 500 million float available for trading, and you see 1 billion shares exchanges hands. He explained very simply how the volumes could go 10, 50, 30, 100x over the actual float available on the single trading day. And this is coming through the high-frequency trading machines. A lot of people are usually expecting when they see that the stock has only, let's say, 10% of the actual float available for trading. Everything else is in the hands of individuals or institutions, and you see volumes of 300, 500, 700 million a day. This is why the example with the pen makes so much sense. If you put only one pen on open market for trading, somebody wants to buy it, somebody else wants to buy it, and there are plenty of exchanges. Who knew that Neostock Exchange has 3 exchanges and NASA has 3 exchanges and the BAT has additional 2 exchanges, right? Or 4 exchanges. I already lost count of how many exchanges these big exchanges already have. So what he exactly mentioned is the biggest issue. You don't know that all these systems appear. He said that they're incentivized. The big exchanges are incentivized to work with the brokers. The brokers are incentivized to get your order executed through their platform, which essentially will be routed elsewhere, which essentially is the business model of many, many brokers, as we all know that. And again, guys, this is before a lot of improvements, a lot of SEC proposals, before a lot of regulations, Department of Justice, and so on and so forth. So even back then, he said that you have 50, 60, 70% of the volume currently not executed. And we're not talking about orders that have been routed. He's talking about orders that are falsely placed on the marketplace simply to reduce or change the price action, something known as spoofing. And for a lot of people not familiar what IEX actually did, it slowed down the high-frequency traders. He mentioned that you cannot simply compete with them because they invest billions of dollars in technologies, in computers, and no one actually regulates them. So what they actually did, they found a way to slow down high-frequency traders so they cannot simply go in between you and your trade. So they can actually capitalize on this spread in between, which data shows prior the whole investigation and review of the whole high-frequency effects over the stock market. Some of these high-frequency trading firms have been making 4,000 trades without a single loss, which probably you're thinking it's a bit red flag, right? I'm very happy that Katsuyama, a person who is from the industry, he was running the trading desk for Bank of Canada. The days before he starts, the brokerage, very smart guy, very honest, you can say knows the business, and he's willing to expose everything that he sees, and he confirms that it's wrong. It shouldn't be this way. And essentially, the individual investor, the little guy, is the one who is taking the losses. And it's not all individuals. We all know a lot of hedge funds who rely on humans to trade on the market are also affected. They also were crying over why high-frequency traders and machines and computers are led to execute majority of the orders. If you want to let them go with a small percentage. Put a particular limit. There is, for example, no more than 10% or 15% of all the market orders that could be executed from the computer. Everything else should be done by humans. I don't know. Conclusion. In conclusion, our journey has taken us through the shifting prospects of AMC entertainment and the enigmatic world of high-frequency trading. We have explored the complexities of AMC's stock outlook, Wall Street's perceptions, and the uncertainties surrounding the company's future. Additionally, we have gained insights into the challenges posed by high-frequency trading and the pressing need for transparency in the financial markets. By shedding light on the hidden corners of finance, we empower ourselves to navigate the complexities and contribute to a more equitable and informed financial future for all. Armed with knowledge and determination, let us endeavor to create a better and more sustainable financial landscape for every investor. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.